Today is more herb, less salt. Take the salt out of your diet. Today is a day that hopes to remind you that there are options for your health by lowering your salt intake. I am here to show you your mortgage alternatives. Less salt, lower rates, lower payments. Today is the second installment of my Mortgage Bootcamp course. Not all people have the same taste and not all people have the same mortgage needs. There are three major categories of mortgages, and today I'm going to give you the recipe for success when choosing the right mortgage for your home buying feast. Number one, conventional loans. These are loans that you normally hear about when people in the media are talking about mortgage rates or the mortgage market. There are two major entities that write the guidelines for these loans. They are Fannie Mae and Freddie Mac. These loans are mainly based on your credit score. If you have less than a 720 credit score or a high salt diet, then your rate could be adversely affected by doing a conventional loan. Remember, on conventional loans, everything affects the rate and it could mean you will pay more. Government loans. This includes FHA and VA loans. These loans are insured by the government and have special qualifications for the borrower. That is you. VA loans are for veterans of the armed forces, and the major benefits are no money down and no monthly mortgage insurance. If you have served in the military, it's time for you to use that VA eligibility. Whether you've used it once or whether you've used it twice, it's still a great option for you. FHA loans offer the low-cost option for a buyer. This means less money down. They go all the way down to a 620 credit score, and you only have to put 3.5% down. This could be your best bet for home ownership. The mortgage and insurance rules have changed recently to make sure you are informed. If you are looking at the FHA option, please verify your monthly payment. Non-conforming loans, these are the loans that do not fit into the other types of mortgage loans. This could be what many people call subprime loans, but this term can also include jumbo loans that are too large for conventional lending. See, Max is already getting hungry over here. She's ready for me to get going with this dinner I have prepared. Subprime loans, as we knew 5 years ago, no longer exist. The mortgage meltdown in 2007, the high-risk loans are no longer available, which is good for you. A lot of times people were put in this loan and it did not make sense in the long term. So the non-conforming loans can be made, though, by independent lenders or independent companies that want to service the loan maybe over a short time period. That means they are not going to sell the loans to Fannie or Freddie. They will set the interest rate and terms of the loan as well as dictate the requirements. With a small taste of what is out there for you on the menu of mortgages, it is important that you have the right chef to cook up your mortgage. In the following bootcamp installments, I will go over these types of mortgages in more detail. If you have questions now, just give me a call. Just call Vince, 303-818-0699. That's 303-818-0699. And I am Vince Reese, the Colorado Mortgage Guy, the head chef of the mortgages in Colorado. Tune in next week for more Mortgage Bootcamp. To remember, today is more herb, less salt.